Today, Robinhood shares sink after the online brokerage reports a sharp drop in crypto trading in Q3. HSBC plans to launch storage services for blockchain-linked securities, and Immutable's Robbie Ferguson breaks down his vision for the future of gaming. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices in the green this morning, with Bitcoin and Ether both climbing more than 2%. As of noon Eastern, Bitcoin traded back above the $35,000 mark, and Ether almost hit $1,900. Solana, meanwhile, rose nearly 3.5%. Now, the gains come as Treasury yields are falling and investors try to guess the Fed's next move for interest rates after the central bank decided last week to hold rates steady. Okay, let's talk about the top stories. Shares of trading app Robinhood tanking this morning after the company reported earnings yesterday afternoon. Robinhood reported that it faced a 16% drop in monthly active users, and its crypto business got hit especially hard. Crypto trading plummeted 55% from a year ago. Overall, Robinhood brought in $467 million in revenue in Q3, a 29% increase, but that fell short of Wall Street's expectations of $480 million. Still, the retail investing app is looking toward growth. In the earnings release, CEO Vlad Tenev said, quote, "Looking ahead, we remain focused on providing industry-leading products that serve far more of customers' financial needs, gaining market share, expanding internationally, and continuing to change the industry for the better." Focusing on the international expansion bit, in the earnings release, the company said it was looking at growth opportunities in Europe and would soon launch its brokerage in the UK to open up crypto trading to EU customers. Next, HSBC announced plans to offer custody services for tokenized assets. The British banking giant has partnered with Medico, a custody firm recently acquired by Ripple, to help provide these services. Now, these custodians help customers store assets from traditional finance, such as bonds and equities, that are represented on a blockchain. The Chief Digital Data and Innovation Officer for HSBC's Securities Services said the bank is, quote, "seeing increasing demand for custody and fund administration of digital assets from asset managers and asset owners as this market continues to evolve." Now, Medico CEO told CNBC that this new partnership reinforces continued momentum working with top-tier financial institutions. HSBC said this new service will complement its current platform, which issues digital assets. The bank also recently began offering tokenized gold held by the bank in London. Finally, today marks 1 year since FTX halted withdrawals and tried to get Binance to bail it out. On November 8th of 2022, SBF took to Twitter to say that he and Binance CEO CZ had signed a strategic partnership agreement pending due diligence. That deal was supposed to help clear the withdrawal backlog that was piling up as worried investors hoped to retrieve their funds. Of course, once Binance saw the financial hole FTX had dug itself, the exchange backed out. 1 year later, SBF has been convicted of fraud. Former FTX and Alameda employees have pleaded guilty, and the crypto exchange's loudest backers are still facing a class action lawsuit. Tom Brady, Steph Curry, Shaq, and others have been tied to the meteoric rise of the crypto exchange, which eventually turned out to be a massive fraud. Some of FTX's spokespeople, like NFL quarterback Trevor Lawrence, have reportedly reached settlements over their promotions. All right, let's turn to Web3 gaming for our main story. I spoke with Immutable's co-founder and president Robbie Ferguson about his platform and the future of gaming as a whole. Immutable is a game development platform aimed at building Web3 games on the Ethereum blockchain. I read that nearly $1 billion have been invested in games built on your ecosystem of more than 150 games, and that your company was recently valued at $2.5 billion. Since you're the president of Immutable, can you take our viewers through how your company works and what's the goal exactly?
Absolutely. So you can almost forget all the complex terminology like Web3 and NFTs. Our thesis is very simple. $150 billion is spent every year on the items inside of video games. This is not the ability to play Call of Duty. It is the costumes and gun outfits and collectibles or the coins in Candy Crush inside of these games. And of that $150 billion players spend, they get $0 for it. They have no ability to sell it, no ability to trade it to other people, no ability to use it in other experiences or games. Just because these assets are digital we essentially have taken away all property rights from these goods. Our vision is fairly simple, which is based on Web3 ownership technology using NFTs. We can give people the ability to trade, sell, collateralize, use in all sorts of financial or utility-based arrangements in-game items, and to ultimately give people value for what the funds they're spending inside of these games. Our mission is to make a platform that makes it incredibly simple to build these Web3 games. And our focus is not on speculative assets that you've seen probably with PFPs or Bored Apes, but instead costumes and skins that are already being bought for a couple of dollars and now have the ability to be traded for a couple of dollars. We've seen hundreds of millions of these trades already on the platform, and we've seen some of the biggest names in the world start to join the Immutable platform as we transform this industry of in-game item ownership.
According to Grand View research I had reviewed, the global blockchain in gaming market size was valued at nearly $5 billion last year and is expected to grow exponentially through the end of the decade, more than 65%. What do you think it will take for that forecast to come to fruition?
Gaming is very hit driven. As soon as you have a single hit game, it will do more volume, more revenue, and more users than every other game combined. It's a power law. And so the reason we have over 200 games building on our platform today, the reason we need so many is to maximize the chances of there being hits over the next year. And I would say if you look at the historic investment into games building using Web3 technology, it significantly outpaces any other shift in the gaming industry. And over the last 20 years, we've seen gaming shift to be a free-to-play business model from a pay-to-play box set. We've seen it shift to have social gaming with companies like Zynga pioneering leveraging the Facebook social graph in order to create viral games. And we've seen mobile gaming take off as one of the largest sources of gaming today, particularly in Asia. The shift to Web3 will not be a category, but it will be an underlying technology that most multiplayer games use. And there's been more than $15 billion now invested into Web3 games over the last 2.5 years.
Last month, you posted on X that the games funded 2 years ago are going live over the next year, arguing that Web3's user adoption curves will be drawn by the biggest games, not just the biggest exchanges. You noted that bear runs are for building. Can you expand on that thought, and what else has happened during this bear market from your vantage point?
Absolutely. Look, I'm actually a big fan of bear markets. We started the company in the biggest bear market that crypto has ever seen in 2018. And that's because it meant we had to ruthlessly focus on real product market fit. And how do we get actual gamers who never even know they're using NFTs or Web3 technology under the hood? And that is the whole point. If you have to sell the value of the technology, there's no reason for it to exist. You should just be able to allow users to experience a product where they get 10 times the value by using it. And so that's really our vision with how we're able to build throughout these markets.
Any consolidations you can speak of?
Yeah, look, I think this market's really interesting. In a bull market, you typically see everyone raising a significant amount of capital and trying to build every layer of the stack by themselves. I think because of this, more financially disciplined context, we actually have seen a real opportunity to take the other major gaming publishers, gaming platforms, gaming players, and help them to build their technology stack on top of Immutables. That massively reduces costs, it reduces competition, and it makes a much simpler choice and better user experience for end games. The most significant one of these I'd point to so far was at the end of last year, Web3 gaming from a competitive standpoint was a two-horse race. Polygon, which is a major blockchain, and Immutable were both competing and had roughly 35 to 40% market share each. At the start of this year, we basically built an agreement where we partnered to unify our products, but also unify our approach to simplify where game developers can choose. Since that partnership, our win rate has doubled to close to 70%. We've onboarded in 6 months more than 90 of our 200 well-funded games on the platform today. And Immutable and Polygon are now by far the dominant market leaders for Web3 gaming. So I think we're going to see more and more of this consolidation over the next year as we see people trying to build at a more specific layer of product strategy.
Now, you touched on this, but what steps exactly are you taking to try to accelerate adoption for Web3 gaming? And what markets are currently showing the most interest in that particular space?
Absolutely. So there's probably three main problems preventing Web3 games from going viral today. The first problem, and the most important, is consumer onboarding. Gaming is competing based on how cheaply can you acquire customers, how much those customers stick around, and how much do they spend. This first leader, how cheaply can you acquire them, is awful compared to Web2 gaming because the wallets we require users to install have a terrible user experience. And typically you will lose 99% of the customers you just paid to acquire at the point you ask them to install a Web3 wallet, learn their 24 seed words. We've built Immutable Passport, which is a completely self-custodial wallet where you can sign in with iOS or with email or with Google, where you can sign transactions and trade invisibly without even knowing you're doing it under the hood, and where your assets are completely secure. And we've already seen this convert 500% more efficiently than wallets that you would customarily use today. So I think that's the first piece, which is how we're smoothing out this user experience, and we're really excited about that. The second thing I would say is successful content. And the main reason we haven't seen many hits today, all of the games funded over the last 2 to 3 years are launching in 2024. Unlike decentralized finance, where we saw a boom in investment and innovation very quickly after, because it's very quick to write smart contracts, games take time. They take 2 to 4 years to build, and we're now seeing the vast majority of content go live in the next year. There will be 4 or 5 hits with tens of millions of users out of that pile. The final piece is this idea of scale and developer experience, actually creating a good platform for people to build on. Immutable is the one-stop shop where you can build without even having to touch a smart contract. Our vision is to be a Stripe-like set of APIs where you can ultimately build without ever needing to know how to build a smart contract on the blockchain under the hood.
Now, Ferguson explains what it will take to get those familiar with Web 2 to move into Web 3 gaming. He also provides his 2024 outlook for gaming. You can check out that full interview at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.